Well, hello everyone. It is the first Friday of the month, which you know what that means. It is the US Payrolls Report. Let's jump in to see what we're looking for in the numbers. The number we're looking for is right around 180,000 jobs. So that is cooling off quite a bit, and that's going to be the weakest monthly gain since December 2019. So this is more evidence that the economy is starting to slow. All the things the Fed said they wanted to see are starting to happen. We're starting to see employment come down, job openings come down. We're starting to see some of the leading manufacturing numbers start to slow down. So we've seen the dollar weaken quite a bit over the past 6 months. So the big question here is, what is this going to mean for the dollar? We'll take a look at that here in a second. But 180K is the number we're looking for. If it's above that, then of course we would expect that the dollar would strengthen a little bit, because it means that the economy is a little bit stronger than the Fed wants, and maybe there's another rate hike in the cards. If it's much weaker than this, then all of a sudden it's saying the Fed is definitely on hold and the dollar should go lower. Now look, hopefully you notice me emphasize that should. One of the most frustrating things when you get started with trading is that what should happen doesn't happen. Okay, so this is why I love to trade these news events, because we are going to react to what happens. We're not going to react to the number. When I was a younger trader, I would be glued to CNBC, I'd be glued to the news services, and when the number came out, I would look at the number and I'd say, oh my gosh, this is what it means. And I would quickly make up a decision in my brain what that number meant, and then I would make a trade based on what should happen. Very frustrating sometimes that didn't happen. What we're going to do is we're going to look at the numbers. We're going to make some projections and things, but we're just going to be looking at the price action. And one of my favorite stories to tell as a trader is that I was up in Canada, and sorry, Canadians, I know this is going to sting a little bit, but I've talked with most of you, and you all agree with me. Canada has really bad TV, and I was up there probably in 2006. And I was there on a first Friday of the month looking for some news to tell me what the jobs report was. I couldn't find anything, so I was trading blind, I thought. And so I just had to react off of the price action. And I made a trade, and I made some money, and I shut down my system, and I went through the day, and I realized at the end of the day, I never knew what the number was. And I thought to myself, oh my gosh, that's how I should trade it. So for the next couple of years, I would turn off all TVs, all everything around news announcements, so I could just react to the news. So let's get some preparation going here. Trading news is always risky. We can enter before the trade, we can enter on the news, or we can enter after the news is out. So as far as risk goes, risk is the riskiest entering before, but it has the highest reward. Second stage entry is the least amount of risk, but also the lowest amount of reward. So let's talk about why we utilize some of these things. There is due to be some slippage. I don't expect this movement to be huge. We've already had a lot of movement. We already just had the FOMC meeting on Wednesday. So I don't think this news announcement is going to be huge and crazy. But when they are, you could put stops in and things will get slipped. So you put in a long, and you put it in your stop order and you get triggered. This is called the whipsaw. And you can see someone with short here, they got triggered. There's always some of this whipsaw in the first 15 seconds. This whipsaw is really, really nasty because it triggers everyone. Everyone, longs and shorts, they get triggered on this. So you really want to avoid this whipsaw because it happens a lot of the time. There's only two ways to avoid the whipsaw. Either have a stop order so far from the entry price that it doesn't get triggered, or you got to wait. You got to wait and do a second stage entry. So let's take a look at the market, and I'm just going to pull down Trading View real quick, and then I'll jump into Trader Workstation and make some trades here. But if we take a look at, okay, what is the strongest and weakest currencies at the moment? So if you take a look over bottom right here, you can see that we've got the weakest currency by far is the Swiss franc. Swiss franc is absolutely getting crushed here, down 1%. So right off the bat, Swiss franc's the weakest. And what is the strongest? The Aussie is the strongest. Now, this is since 5 p.m. yesterday, Eastern time. Let's quickly go down. Okay, let's start off with this dollar trade. So we had a big move down in the dollar. So I would expect the dollar is a little bit sold out. But we are getting a nice little bounce here. We always love to sell into bounces on downtrending currencies. So this is a decent opportunity. I'm looking at this dollar saying, okay, I want to be short dollar because the trend is clearly down. But, we're getting a little bit of bounce off the bottom. So right away, I'm looking at, okay, I want to be short dollar, not long dollar. But in the short term here, the dollar is moving higher. And the reason I'm going to say that, I'm on a 1 hour chart here, and you can see the EMA is now actually sloping higher. Slightly, but still higher. So right here, right now, I really don't want to take a short here in dollar because right here, right now, the price is going up. But ultimately, we think this rally is likely to fail since we are believers in trends. One of these spikes, we're looking to get in off of some spikes. So it's not super clear on dollar what I want to do here. Let's go into this Swiss franc. Swiss franc just had a big fall. There must have been some news out. And you can see we are low basing here. So big move. It likely needs a little bit of time to consolidate and to gather some more steam. I just want to go through these and say, okay, where is the momentum? Where's the momentum right now? Here's the pound. There's not a ton of momentum here. Not seeing it here. Here is the momentum right here. We've got nice green candles. We got something that's currently moving right now. It is the CAD. Let's finish it off with Aussie and Kiwi. As you can see, Aussie had a big move overnight and is now resting a little bit. But again, it's just a pullback. Aussie could be a decent trade. But right now, again, the momentum isn't running like the CAD is running. The CAD is running now. Aussie is pulling back, trying to gather some energy for a run. Kiwi here is basing. So looking at this, there's no question in my mind that dollar CAD is the one I want to take a look at. CAD is showing the most momentum to the upside. We also have news on the CAD. We've got employment report from Canada. So this is going to be I don't want to say a good trade. Whenever I say a good trade, I mean this is something that is going to move in one direction strongly where there's not a lot of chop to stop you out. Now, that doesn't mean we're going to get it right, but that's what we're looking for, a trade. Something that moves strongly enough with enough momentum and trend to not stop us out in some chop. So this is where I'm hunting, dollar CAD. Let me jump into Trader Workstation. Let me look at some levels. We'll place a trade here. But again, I'm looking at a second stage entry. I'm looking at a second stage entry, meaning I'm not looking to get in right away. I'm not looking to, as soon as that report comes, to take a position. I'm going to build my trades. So I'm going to go ahead and just build an entry here. And I'm going to be using a stop limit. We always use stop limits here on our news trades. The stop is where we want the order to go out. The limit price is, we say, but we don't want it for lower than that. So I've got a stop order at 134.77. 134.77, and I've got my bottom of my limit at 134.70. So I'm giving it a 7 pip window. Giving it a 7 pip window here. And of course, we always want to just go ahead and attach our stop orders right off the bat. My rule is when I do a news trade, I usually am about 0.3% away on my stop. So that's going to be about 40 pips. So I need to be at 135.17, somewhere right there. Now this trade isn't live. I'm not ready to make it live. I want to avoid the whipsaw. So when the news comes out here fairly soon, in less than a minute, I don't want to have this whipsaw. And I don't want to get stopped out. But I do want to get this order out. Okay, so the initial move here is dollar up. The initial move here is dollar higher. Now, I actually really kind of like that better. Because remember, looking at the dollar chart, I wanted a little bit more of a bounce in the dollar. I wasn't quite happy with this little bit of a bounce, but a much bigger bounce is a much better opportunity if something is going to stay in a downtrend. So we've got the initial move, up dollar. Okay, let's go check on the news just so we can talk about it. We're not going to react to it. But here are the numbers, 253,000 jobs, much stronger than expected. Probably more important, 0.5% on wages. It was supposed to be 0.3%. This is a very, very strong report. Oh, wow. Unemployment rate drops to 3.4%. Okay, this is quite a surprise for the markets. And my guess is that the equity markets don't love this. Okay, we're selling off a little bit from where we were before the announcement on equities. But this is a very strong jobs report. Now, this is where, as a young trader, I would get in trouble. Now, I just spent all this time walking through, I want to be short dollar. I walked through what I wanted to be short dollar against. And then the news comes out, and it's completely opposite of my premise of what I thought was going to happen. Now, as a young trader, this is where I would scramble and in my brain try to quickly shift gears and put together a reason to be long dollar. And I would get there really quickly. I could get there in like 10 seconds of why I want to be long dollar now. And I would go and scramble and I would make this trade. And as you can see, that trade is just a very reactionary trade. I didn't do any of the work I did beforehand to determine what I'm going to do, where I'm going to go. It was completely reactionary. So I have a rule. It's called my one-shot rule. I have one shot on a news event. My order was built. My order was built on dollar CAD. That's where it was built. And this is the only trade I can make. This is the only trade I can make. Now you can see that, let's just for fun, check and see what the CAD employment report was much better than expected as well. So we've got two currencies, CAD and dollar, that are both strengthening off of their news reports. So look, dollar CAD, I actually still like this trade. But if I'm going to make a CAD long trade, it should be against something that's weak, not against something that's strong. But as I said, I didn't build that trade. I didn't build it. This is where, again, I have my one-shot rule and I stick with it because I get one shot. That's it. It has helped me to be, again, to not be so reactionary, to not jump around during news announcements. But for anyone out there who is looking for, okay, where do I go hunt? I think it's pretty clear. CAD. CAD had the most momentum going into this. And, I was looking at it against the dollar, which the dollar now also has some upward momentum going for it. But looking around for things that are weak, this is where you want to be hunting. CAD yen, CAD Swiss franc. These are the crosses that are most likely to pay off today. I am done. I don't get to jump around. I don't get to say, hey, this is what I want to do now, because that's reactionary. All right, got a question for euro dollar. Okay, the big problem is going into the announcement, dollar was having a bounce and euro was basically flat. So the fact that euro wasn't going anywhere, the question is that the best place to be hunting? We had, so if you're looking to be, again, long dollar and short something else, then you really want to take the things that were already weak. I think dollar Swiss franc is a better trade. I think dollar Swiss franc is a better trade. And if you want to take a look at the yen was kind of middle of the pack, but I think the dollar yen could be something fairly interesting as well. There weren't a lot of weak currencies other than the Swiss franc. And as I talked earlier, the Swiss franc already had a big push down. It may be sold out just for the time being. So for me, probably dollar yen would be the most interesting place to go hunt. But on a 1 hour chart here, it's a very, very early turn. Off of 3 or 4 days of straight down. This is it's not a trade I take. Not a trade I take at all. All right, well, I'm going to flip back to dollar CAD. You can see dollar CAD this could absolutely go out as a trade. This could absolutely go out. Here's the problem: is that the CAD is looking strong, but the dollar's also looking strong. This is the wrong pairing. If you are determined to make a trade off this news, you want to look at CAD versus something else. And we talked about probably the best place to go is CAD yen, CAD Swiss franc. That's where the weakness is at the moment. All right. Saf asked the question, would I still initiate the trade? I'm not going to initiate the trade because it's not the right trade. So I've identified now 2 currencies that are both showing some strength on a short-term basis. So here's my dollar basket. Here's my CAD basket. I don't pair up strong versus strong currencies. I don't pair up weak versus weak currencies. It's not the right trade. It's just not. So if you're going to choose a trade, you either got to go long dollar against a weak currency. Again, yen. Okay, euro maybe, Swiss franc. That's where the weakness is right now. If you want to be long CAD, then you got to be against the same 3 currencies: yen, Swiss franc. Okay. Again, I'm not crazy about euro here, but yen, Swiss franc, euro. That's where you want to be weak. So if you want to make a trade, you've got to go through, again, all the same thing. Go identify some points, identify some entry points. The problem is that this, to me, is not an entry point on a trade. Let me go to dollar yen. Like, I personally like dollar yen the best, but here's the problem. This isn't an entry point. This doesn't fit any technical entry point of mine that I use. I get in off of pullbacks and high bases from the trend. The trend is barely changing here. I have one little spike. I have no reason technically to get into this trade. I would have to wait until this bases pulls back. It's a Friday. I don't have time. It's going to be at least 5, 6, 7 candles. The day's over. The week's over by then. So for me, I cannot make this trade because while, yes, everything I just talked about fits, I want to be long dollar yen. I can't just go buy it indiscriminately. I have to have a chart pattern on the time frame I'm looking for. This prohibits me from making this trade. Now, that being said, could I take this trade next week? Absolutely. Once I get a couple more candles and the trade develops and I actually get a trading setup, yeah, I can absolutely take this trade. But at this point, there's not a tradable chart pattern. Now, look, I'm pretty convinced I'm right on this, which, again, is a dumb thing for a trader to say because we don't know. News could come out in 1 minute that changes everything. But you've got to hold yourself to rules. And these rules are going to keep you safe. So while I think dollar yen is likely to go higher, while I think it's a good-looking trade based on just the news and the current momentum that's happening, I can't make it. I can't make it because I don't have a tradable chart pattern. So hopefully that helps. Well, thank you for joining me this morning. I wish we could have grabbed something that was nice and moved nicely, but that is trading, isn't it? Where you show up, you do all your work, and it doesn't trigger, and you just throw all that work away and come back the next day. So everyone have a great weekend. Stay safe out there, and we'll see you next week. Goodbye, everyone.